Good morning, everyone. Welcome to the TradeStation Getting Started. But let's go ahead and get this class started. And thank you for joining me this morning. For those that are, familiar with the Getting Started series, this is um, a series of classes that we do to get people started on the TradeStation platforms. A lot of times it is challenging when you want to do what you know best, which is trading the markets, and you are not really familiar with the tools and the technology that allows you to place trades. So it's important that we do these classes so that we give you that information and you can take full advantage of the TradeStation features and the TradeStation functionality. For those that don't know me, my name is Jesus Nava. I am the Director of Client Training and Education for TradeStation Securities. It's always a pleasure for me to be here and talk to you a little bit about what we do here at TradeStation. And today we're going to highlight our OptionStation Pro platform. We're going to try to keep the class brief. And in the next, 30 minutes, I'll give you highlights of OptionStation Pro or where you need to go in order to find the tools that you need. Okay. As usual, the disclosures, just keep in mind that every symbol and idea that I talk about is for educational purposes only, that these are not recommendations of TradeStation. Also, active trading is not suitable for everyone. And if you need additional information on these disclosures, just go to www.tradestation.com/important information. All right, guys, thank you. Thank you for joining me today. Let me go ahead and switch over to my TradeStation platform. All right. And if you guys have any questions about the TradeStation platform, or in this case, OptionStation Pro, please make sure that you send those questions in the chat. I'm going to launch OptionStation Pro right here on my computer. Okay, so that's loading up. When you launch OptionStation Pro, it goes into a separate platform. So this is something that runs along with my TradeStation desktop, but it looks like a separate application. I'm sorry about my screen resolution here. I kind of adjusted my screen resolution so that everything wouldn't look so small. And I think it messed up my column headers, which is okay. I can, very quickly just adjust them. We're going to come here to this view in just a moment, and I don't want it to look like it does at the moment. So let me just adjust the columns very quickly, and that way there's no confusion as to what you're looking at. Your OptionStation Pro may look a little bit different. Anytime you open up OptionStation Pro, it'll remember where you were, and it'll take you exactly there so that you can continue doing what you were doing. So that's why I was sent to this Manage tab. If you look at the bottom left of OptionStation Pro, it only has 4 tabs. And at any given moment, you're going to be in one of those tabs. So if you pulled up OptionStation Pro and it looks different than mine, it's probably because you are on a different tab. I'm going to go here to the options because that's where you find the options chains. I have a symbol that's populated here at the very top. Let me go ahead and lower this a little bit. Okay, you can see right here at the top that the symbol is BWA. That's another thing that, OptionStation Pro remembers. If you're looking at any particular symbol, it'll load it up again in your OptionStation Pro just to make things easier for you, okay? I have BWA. My strikes are kind of tight. Let me go ahead and expand those a little bit. Here's a dedicated dropdown that allows you to see more strikes. I think by default is set to 10, but depending on how many strikes you need, you may want to adjust that. The more you, the more you enable, because a lot of people will say, well, let me just show them all. But the more you enable, of course, the more data updates your OptionStation Pro needs to do, and the more resource intensive the technology becomes. So only enable the strike price that you're going to find using. If you're, if you do all, if this is a stock that is trading at $35, and you're not going to be trading strikes at $17 or strikes at $55 because they're too, you know, too much far away, then you may not need to see them. So just do what you are going to need in your own trading. I'm going to set it to 10 just so that it's something medium. So I'm going to open up the expiration dates here on the left-hand side. Notice that there's a little caret that allows you to expand each view, and you have all the strikes, and it tells you inside parentheses how many days until the expiration of that option group. Over here on the right-hand side, where my cursor is, you also see average implied volatility for this grouping of options. And it also tells you, based on that implied volatility, what is the expected move for the underlying. So this plus and minus $3.10 that I'm pointing to with my cursor just means that BWA, now this is the underline, is expected to move $3.10 in either direction. So there's no sense of direction here. It just tells you based on volatility, what is the probability of movement. So it can go $3 up or $3 down until the expiration of these options. This is 65 days into the future. So that's, a lot of information that helps you make decisions as to which strikes and which expirations you would want to trade based on your market outlook, what you think is going to happen to the underlying. So there's a lot of factors that are playing into, strike selection. Let me go ahead and collapse some of these. For most stocks, you're going to find that you're going to see monthly intervals. I think I have my OptionStation Pro filtered to only show monthlies. But if I go here to the filter, I can go to the expiration types. Okay, all of them are selected. So in this particular case, it appears that we only have monthly expirations. If I change the symbol, like that, I go up here to the top left and I pull up something like Spiders, which is an ETF based on the S&P 500. You can see that I see a lot more. Not only do I see the ones that are lighter gray, which are the monthly expirations, but I also see the weeklies and I see quarterly expirations. So you see all of them mixed in together. So depending on which underline you're loading up, the data is going to change. In here, of course, let me just open up one of these expirations. This is the one that is expired. Let me just go a little bit further out. I'm going to go here to December. These are the monthly expirations in December. Any time that you click on the bid or ask, this is going to have an effect on OptionStation Pro. By default, it's going to assume that you want to trade that put or that call. The behavior is controlled by this little drop down on the top right that says trade or analyze trade. If it's set to trade, it'll send the information to the trade bar so that you can submit a trade on that put or on that call. If you want to do some analysis on theoretical values or risk reward profiles, then you set it to analyze trade. And when you click on the bid or the ask, it will not populate the order bar. What it'll do, it'll send the information to the analysis tab where you can do some further analysis of that options position. And then maybe you want to look at probabilities. Maybe you want to look at, volatility adjustments. Maybe you want to play with our price slices to look at theoretical values. Whatever the reason is, you may want to do some additional analysis on that option. So let me go back here to my options tab. As soon as I click on one of them, let me just demonstrate. Let me go ahead and set my click to back to trade. And if I click on the 596 in the money option, this is a call at 596. The stock is trading at 596.69, a little bit above that. If I click on the asking price, it's going to submit a buying transaction. The color is very telling. So blue is for buy, red is for sell. So depending on which side you click on, the trade bar right here at the bottom is going to be pre-populated with that order action, which is a buy. Not that you're tied to that action, because I can click on this little drop down and I can change it to a sell if I wanted to. So everything is customizable. But clicking on the ask assumes that you're going to buy it, and clicking on the bid assumes that you're going to sell it. In fact, notice that it's highlighted in blue, assuming that it's a buy. But if I click on the bid price right here on the side, it turns the highlight in red because now it thinks I'm going to sell it. The same thing happens here on the put side. Clicking on the bid, highlights in red. Clicking on the ask, highlights in blue. And then you have all your information there and handy. If you wanted to do a spread, all you need to do is hold the control key. So let's say, for example, that I wanted to buy the 596 and I wanted to sell the 598. All I need to do is hold down the control key on my keyboard and click on the 992. That way you can see a multiple selection. That's very simple to do. And you can create these custom spreads by selecting the legs that you want to add onto the trade bar. Notice that now I have 2 legs. Of course, I can continue doing this. I can maybe buy the 594 and I can sell the 592. And as soon as I do that, I have 4 legs inside of my trade bar, and now it's recognized as an iron condor. Those are things that you can do right out of the box. Just remember that if you want to do these types of multiple leg selections, just hold down the control key and click on all the legs that you need. Now, of course, I could have selected an iron condor from my spread selector. So let's suppose that I want to clear this trade bar. Maybe if I click on one, it'll just clear it. I can right click on the highlight and remove the leg as well. And you can see how the trade bar is just cleared, and there's a little hide button right here below that allows me to hide the trade bar if I need to. So from here, if I wanted to do an iron condor from the spread selector, I can very easily just select iron condor, and you can see how my option chain gets organized and the strikes are set together. They're the 4 strike price. So if I click on the buy or sell of either one, it'll automatically send those 4 legs into my trade bar. So whichever way you think it's more convenient for you, choose that. Whether you like selecting the legs one by one by holding down the control key, or you like OptionStation Pro to organize your strikes automatically by doing the spread selector, the spread selector right here on the top left, just choose the one you like the most. If this spread selector does not organize the strikes in the distance or the spread that you need, just go here to the filter dropdown and you can adjust the spread width. So if you set it to 2 and I apply it, it'll skip 1 strike price in between. The distance between strikes is all going to be the same. So if you want to have a custom distance between a put or a call that is different than the other, side of the spread, maybe then custom would be the way to go. And holding down the control key gives you, that control. But if I click on any of these, let me click on this one again. And I go back here to the spread selector and I go to single, then I can see the breakdown. So anytime if you select from the spread selector and then you go back into the single category, then it'll let you see all the highlights. Okay, cool. Let's see. I don't see any questions yet, so I think everybody follows me. From here, let's say that we want to place this trade. It gives me the pricing here. I'm going to try to improve. By default, it gives you the natural. I think it gives you the mid price by default. Those are settings that you can change. I've set mine to give me the natural pricing. I think that's controlled here on the top right. You're going to find a cog wheel that gives you settings. And then under order settings, I think, no. Option chain, no. I think it's common. Here it is, use midpoint as price. If I were to select this and then click on close, I think that's what's the default. It'll automatically choose the mid price between the bid and the ask for your price. It'll try to improve your entry price. If you do natural is what the current bid or current ask is. You would be buying at the ask and selling at the bid. That's what would happen if you do natural, which would be okay. If I want to have, the mid price, let's do 190, and I submit my trade, that order will be pending because I picked a price that was a little lower, $1.90, and I can manage that trade here on the Manage tab. If I go to Manage, I see my iron condor sitting up here. I can expand it by clicking on this little caret, and you can see the individual legs. Hold on. So it's not the little caret, it's actually the plus sign. And you can see all the legs of that iron condor. And you can see my limit price, 190. Of course, I can right click on this trade and I can say, let me cancel replace. Maybe I want to get filled at the natural pricing. So I'm going to do natural and I'm going to do place order. And as soon as I do that, notice that I get filled. My price was 197. And let's see, my fill price is 196. I got filled at 196, a little bit lower than my limit price, which is great. And I can see my legs here in my positions section. Once you get legs back, all you need to do is group them together. One thing that TradeStation allows you to do is control the way that you're going to organize your spread legs. I know that I traded an iron condor, but now I see all individual legs here in my positions. But that's okay. I can grab my two puts and combine them together by clicking one and drag it on top of the other. So I'm going to click on one of these puts. I'm going to hold my mouse button and I'm going to drag it up so that it drops on top of the other. You can see the purple highlight just giving you a clear indication of what's going to happen. And as soon as I drop it, notice that this creates a vertical. I can do the same thing with my calls. I drop one call on top of the other, and now I have two verticals. If I take, which allows you to see that I'm able to, even though I traded an iron condor, I'm able to split that trade up and trade it as two individual verticals, which could be, part of the strategy. You entered as a vertical, I'm sorry, you entered as an iron condor. Maybe the market goes in your favor or against you, and you decide to get rid of one side of that iron condor, and you can split that trade into two. But if I take one of these verticals and I drop it on top of the other, it automatically, creates an iron condor. I can click on the plus here, and I can manage it that way as an iron condor. Now I can analyze this trade just to see where profitability is. So let me go ahead and right click on this iron condor, and I'm going to analyze a duplicate. This will send me to the analysis tab. And as you can see, profitability is outside certain levels. So let me see, what's my maximum profit here is 4, and the maximum loss is 196. This is not a very good win-lose ratio. I would have liked my maximum profit to be a little bit higher than $4, but notice how, the cone of probability is very narrow here on the losing side. So, it would be 591 and 598. So we're talking about $7. As long as, as long as Spider, moves away from that spread, we're wind up, making that profitability, but it's very narrow. So this is probably not a good trade. It was just an example that I placed in, but it does give you a sense of where profitability is. So let's say, for example, that you want to set some profits or some take profits or some stop losses on this. I can go to my manage tab and I can set a closing transaction on this iron condor. I can right click and say close this position. This gives me the trade bar. Notice that now I'm getting rid of the iron condor. That's why it's red, because this is a closing transaction. Notice that instead of opening, it's closing, and I'm receiving a credit. I paid $1.96. So maybe if I'm trying to receive a higher credit, maybe I want to get $2 of credit. I put in a $2 and I say, give me a limit of $2. I place that order. And you can see that at the very top, I have an order for the iron condor and it's shooting for $2. As soon as the iron condor has a spread price of $2, then it's going to get out of that position and make that difference. The difference of I got filled at 196, about 4 cents times 100, it's going to be $4. So just an example. I'm not saying that this is a good trade. I just submitted this iron condor and I'm just going through it. But this is the way that you would set a take profit. If you want to do a stop loss instead, let me go ahead and right click on this and cancel the order. Let me right click on this iron condor and say close this transaction or close this position. If the credit goes against me, let's say that instead of going up, it goes down at $1.50, meaning that if I paid 196, I would lose about 46 cents, or if we multiply by 100, $46. But that's the way that we set a stop. And we change the order type here to a stop market so that if it reaches that credit, let me change it back to $1.50, it's going to stop my trade. Let me place that order. And then you have that order transaction right here as received. This is my new one, that it's a stop order if the price of the spread reaches a certain level. You may also do a closing transaction based on the underlying. And that's something that as traders, we have full control over. Let me go ahead and cancel this trade. And let's say that I want to right click on my position and I want to say close this position. I want to close this position at market. But I'm going to use activation rules. By the way, there is a video inside of the Options Education Center that talks about activation rules in a little bit more detail. So I would suggest that anyone that is interested on setting activation rules on their orders watches that video. But here I can click on the ellipsis and base my activation on the prices of the underlying. So spider, and I can say if spider is greater than, let's say that I'm going to say 600. And then come here and say, change the operator here to or. So if it's greater than 600, or if it's less than, I can say 595, then I can exit this trade. These are like trigger prices. If the underlying, trades at any of these two prices, it'll trigger the order. What order? The one that is right here. I'm setting this as a market order because when the underlying reaches 600 or when it drops to 595, I'm not really sure what the price of the legs are going to be. So that's the reason why this is set as a market order. I mean, I can try to estimate it, looking at other options values, but I'm just going to set it as a market order. I'm going to place this order and then click on yes. So that's an order right here at the very top that's been received for my iron condor. And it's a market order that hasn't gotten filled because there's two activations that are being monitored. One at a higher price that I selected and I put in as 600 and the other at 595, which is a lower price. This is a good way for you to set sort of an OCO. At the present time, TradeStation does not support OCO functionality for options trades, but this is a good way, like a workaround for you to set that OCO. Don't you want DTTN? Maybe, Maurice. Those are things that you can choose. What Maurice is asking, I'm just taking a question here from the chat. I believe what Maurice is talking about is let me cancel replace. So the activation rule, the way that the stops are being triggered by default, TradeStation triggers those prices on a single trade. So as soon as there's a trade or a tick happening at that price, that's what triggers the orders. And you can change the behavior of that, of course. You can do a single trade tick. So let me see. You are taught to always use DTTN when closing spreads using activation conditional orders. Maybe there may be a reasoning why you were taught to use that way. I mean, there's a lot of maybe prints that are submitted to the ticker tape late. Whenever any prices are submitted out of sequence, of course, it could trigger your order on a price that is not in sequence. And that's, of course, is a possibility. Nowadays, that happens very rarely. However, yes, there is a point on changing the way that the stop is triggered to something a little bit more secure. And I say secure because then you're double checking that the price is actually happening. That is not just a bad print. That is something that is also part of the national best bid and offer. The way that you, let me cancel this trade. The way that you switch that, now that Maurice is making mention of that, is over here in the activation rules. When you submit a price activation, I'm going to add it here, is the trigger type. And you have, a whole collection of trigger types. You can see how the default is STT, which is single trade tick. As soon as the trade happens, then the stop or whatever condition is going to be triggered. If you want to do a single trade tick with thin NBBO, this one right here, the second from the top, not only looks at the single trade, it's also going to look at the bid and at the national best bid and offer to make sure that it also matches that trade tick. Now, of course, if you do DTTN, double trade tick within NBBO, of course, it's going to do a triple check because now it's going to require for the trade price or the conditions that you're establishing to happen 2 times. So 2 trades must happen at the price condition that you specify, and the price needs to be within the national best bid and offer. Now, one of the things that you need to think about when you do that is it may delay the activation of your order. Remember that you're setting activation rules. And if you do want to double check or triple check the prices that are being submitted, of course, the trigger is just going to hold until your selection is met, whether it is single or double or national best bid and offer. It's going to wait until all those prices are aligned for it to trigger your order. So just be aware of that, because maybe, you are under the impression that as soon as, it hits your price, it gets activated, but it all depends on the behavior you choose. A lot of people like to be, double or triple sure that a price has happened. So that's why we have that drop down so that you can select the behavior of the activation. Thank you for bringing that up, Maurice. I appreciate that. So those are the few things that I wanted to highlight today. I'm going to, cut this class short because I wanted to just give you a brief overview of the OptionStation Pro platform. We have more in-depth videos on the TradeStation platform, and I want to show you the Options Education Center that we've designed for everyone. If you haven't been to the Options Education Center, come to TradeStation.com, hover over Learn, and go to Options Education. We are creating articles, videos, webinars, all around complex option strategies. If I scroll down, by the way, there is a webinar, an options webinar happening this afternoon at 2 p.m. If you haven't registered, is a webinar on diagonals. So make sure that you join us for that presentation. Actually, yeah, it is diagonals. We have an article here already created that is going to be referenced during that webinar. The article goes into detail about the benefits and risks of diagonals and how you can trade those on OptionStation Pro. All right, guys. Well, thank you for your time. I appreciate you joining me today, and I always look forward to seeing you in one of my future classes. Okay. Thank you for joining, and I wish everyone a great morning. Goodbye, everyone.